Ladies and gentlemen, Greg Michalowski from ForexLive.com. I'm going to take a look at some of the major currency pairs as we close the Monday holiday trading in the U.S. in observance of Martin Luther King Day. And we look toward the new trading day in the Asian Pacific session. So let's get started. For the euro versus U.S. dollar, since this peak right here to this low right through here, the price has been able to extend above the 38.2% retracement of that move on a few occasions in trading last week. More specifically on Thursday's trade, lots of little moves above that, and again on Friday, but the momentum could not be sustained. The price rotated to the downside. Now, where most of the trading has been occurring has been within this trading box right through here. Yes, there are moves a little bit lower through over time through right here, more specifically, and right here. But in trading last week, the low price came in right around the 109.10 level. The high price came in at 109.98. So if you subtract one from the other, you get only about 88 pip trading range, and that's congruent with a trading market that really doesn't know which way it wants to go. The price is moving up and down and up and down and up and down. You can see the flows, and in trading here today, it just got even more narrow into the close, and the narrowness that we've developed has come in between the 100 and 200 hour moving averages. That's the blue and green lines in this chart, which is near the middle of this trading range right through here. So the 200 hour moving average comes in at 1.0948. The 100 hour comes in at 1.0956. And in the new trading day and going forward, we're either going to need a move to the upside, in which case we'll look toward the 38.2% retracement, look toward the 109.98 level, the double tops right through here, and look toward the 50% retracement of this move down from the December high to the January low. Those would be the progression to the upside if the dollar starts to go lower this week. Conversely, if the dollar starts to move higher, we are getting some Fed officials who are, sort of saying, well, rate hikes or rate declines or cuts aren't necessarily on the table right away. But if we were to go lower and get a higher U.S. dollar, the key level to get to and through would probably be this 109.29 level. That level corresponds with the low price that we saw on Wednesday's trade, also on Thursday's trade. In trading here today, we moved down toward, like the 32 level, ahead of that 29 level, and found early buyers against that level. So going lower, we're going to need to get below that level, get below this 109.10 level, which is the low from last week, and then we start to work toward our low price for the month, for this year, and for this month at 1.08767. That would be the progression on the downside. Right now, with the price out below the 100-hour moving average and not quite below the 200-hour moving average, the bias is tilting a little bit to the downside, but we still have work to do getting below that 200-hour moving average, and then we'll look toward the 1.0929 level. That's probably going to be the key level, I think, for in trading here today on the downside if this sellers are to take more control in the euro versus U.S. dollar. Let's take a look at the dollar versus yen next, and we are seeing a move to the upside here in this currency pair, but all of it happened in the Asian session, European session, and the New York session. We've been largely corrective / sideways. The move to the upside in the Asian session was spurred on technically by holding the 100-hour moving average as the blue line of this chart right through here. Recall from Friday's trade, we came down here, came down to it here. Each of those times the price found support and moved to the upside. It wasn't until the late in the London morning session, early U.S. session, where the price started to move below that level, but we did find early buyers against the rising 200-hour moving average. Price hasn't been below the 200-hour moving average since its day in January 3rd. So if the price is going to go lower, it needs to get below the 100-hour moving average, just rising 100-hour moving average. And right now we are fairly good distance away from that. It's at 145.25. The current price trading at 145.78. So we're about 50 pips away from that level. So the buyers are remaining more in control. Now on the top side, we do have the 50% midpoint. I'm going to show you what that is from. If I go to the put this on a 4-hour time period, and take a look at the high price from November 1 to the low price that we saw in December, 50% retracement comes in at 146.07. Also near that area is this swing area, this yellow area between 145.96 and 146.21. That level was defined by a swing low through here. That's where it all started. And then we broke below that level. We moved above it and below it here, but found support buyers here before breaking back below it, and then used this as resistance. And it didn't return to that level until this day right here. Again, this is 4-hour chart, so each of these dashed lines represent a week's worth of trading. In trading last week, the price did move above both 50% retracement and the high of this swing area, but could not sustain momentum and rotated back to the downside. And trading here today, we moved back toward the low of that swing area, but found early sellers against that level, found early sellers against 50% retracement. So going forward, we need to get above this area, need to get above this yellow area, and particularly get above the 50% retracement and stay above that level. If we are able to do that, that would be more bullish for the dollar versus yen. If we can't do that, we can see the buyers turn to sellers on the disappointment as price rotate back to the downside in this currency pair. Finally, let's take a look at the sterling versus US dollar. And I've been crying about this pair for a while now, in particular all of last week. Why? Because, all of this ups and downs, and not necessarily paying attention to much from a technical perspective. You can see how the price has moved above and below the 100 and 200-hour moving averages. Even today, the price low came below the 200-hour moving average not once but twice on two separate, more hourly bars through here than just one. There's maybe about 4 different hourly bars where the price fell below the 200-hour moving average. It couldn't do anything. I guess there's hope from a technical perspective that the market is paying attention to something, and that would be the 100-hour moving average of 127.38. Trading here today, the high price came up to that level on a couple of different occasions and found willing sellers, but we are trading still between those two moving averages. So we're about as neutral as you can be in this currency pair as it continues its ups and downs in trading that is seeing lots of volatility and non-directional volatility at that. And that has traders frustrating, but it is what it is, folks. You can always choose to step away from this currency pair until we start to see some more trend-like activity or pay attention to at least some of the technicals. That might be helpful, right? Yeah, why not? My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.